This video is for Unit 1, and we are going to talk about types of business ownership. So there are three main types of business ownership. These are not the only three types, but the three main types. We have sole proprietorships, partnerships, and corporations. It's important to remember that the form of ownership can change during the life of a business. So we might see that maybe a business starts out as a sole proprietorship, and as it grows, we might bring on a partner. And maybe even as it grows even more, we might turn that business into a corporation. So just because we decide on a business ownership at the beginning does not mean that we have to stick with that ownership forever. First, we're going to talk about sole proprietorships. Sole proprietorships just mean that they are owned by one person. There's only one person. 3/4 of all businesses in the United States are sole proprietorship. So that means about 75% of businesses in the United States are sole proprietorships. We're now going to talk about some advantages and disadvantages of sole proprietorships. We're going to start with advantages. First of all, starting a sole proprietorship is fairly easy. It depends on the state that we're in and also the business that we are starting. We might just need a license or a permit to do business. Another advantage of a sole proprietorship is that we as the owner are the only one in charge, and so we don't have to consult with anybody else. We get to make all of the decisions. We get to run the business the way that we want to run it. With that, we also get to keep all of the profits. We don't have to share the money that we make from the business. We don't have to share it with anyone else. And then this is something that we're going to talk about with every business is we're going to talk about taxes. And so with a sole proprietorship, we are only taxed one time, and it's usually at a lower rate than a corporation. And so when we talk about a sole proprietorship and that business, or I should say the owner in that business, they're really, in the government's eyes, they're considered one entity. And so that income from that business is taxed one time. And we'll talk about that more when we get into corporations. A disadvantage or disadvantages of owning a sole proprietorship is, first of all, the unlimited liability. That owner is responsible for all of the company's debts. So they are the only owner, and so they are the only one responsible for those debts. Remember, we talked about too that the government sees that business and that owner as one thing. And so anything the business loses, the owner loses as well. Another disadvantage is they can oftentimes have limited access to credit. Just when we talk about credit here, we're meaning money. There's only one place, one person to get that money from to start the business. Sometimes we might see that a bank is a little more hesitant to give money to a sole proprietorship because there is only one person that they can reclaim that money from. And so it's really important as a sole proprietorship that we have an awesome business plan put together. Another disadvantage is that we only have one person, and so we only have one set of skills to run the business. So we can run into some troubles here if we don't have all the skills that we need to successfully run a business. We might have trouble. And so if we don't have all of the skills, we need to know where to go, who to go to, when to go, and get help with those skills that we're lacking. And then another thing that we're going to talk about with every type of ownership is what happens when that owner dies. So when we talk about a sole proprietorship, when the owner dies, that business technically dies as well. Now there's ways that we can have that business continue on, and that would be legally that we would maybe leave that business into someone else's hands. Next, we're going to talk about partnerships. So partnership means that a business is owned by two or more people. It can be more than two people. We might have 5 people that own a business, and that would be considered a partnership. Now with that, all of those partners are going to share the risks of the business and also the rewards of the business. We should have a partnership agreement before we start a business as a partnership, and that contract is going to outline the rights and the responsibilities of each of those partners. And so if I go into business with someone, we might talk about how much we are each investing into the business, how much money we are each individually putting into the business. My partner, maybe they're putting in 70% and I'm only putting in 30%. And so that would be how much then we own of the business. That might then also mean that my partner gets 70% of the profit and I only get 30%. Those are the types of things that we want to talk about in our partnership agreement. We'd also want to talk about our responsibility, who's in charge of what, who makes what decisions. This just allows us to have a set plan before we actually go into business, and it will help for the future so that we don't have any problems. Some advantages of starting or owning a partnership. Just like a sole proprietorship, it's usually pretty easy to start. Again, depending on the state and the business, we might only need a license or a permit to start our business. It's also going to be a little bit easier to obtain capital than maybe a sole proprietor, because now we have two people that we're able to get our money from. And then that next bullet kind of goes with that as well, as banks are often more willing to lend money to a partnership because, again, they have two people that they're going to be able to get their money back from. Just like a sole proprietorship, a partnership is only going to be taxed once on their income. Again, the business or the government is going to see the business and the owners as one entity, so their income is only taxed once. And then I would say one of the biggest advantages of having a partnership is that we can have partners that have different sets of skills and talents. So maybe if I'm going into my business and I don't have very good financial sense, I don't have a very good background in accounting, I want to find a partner then that has those skills. Maybe if we go back to that video that we watched about the cupcake maker and how he opened up the business and didn't have great business skills other than making cupcakes. Well, maybe I wanted to open up that cupcake business. I'm going to find then partners that are able to do the financials, and maybe a partner that's also able to really handle the management and the employees. So I have my set of skills, I'm good at making cupcakes, and then my other two partners have those other set of skills that make us be successful then in our business. Some disadvantages of owning a partnership is that all partners are going to share the business risks. If we do not agree, that can become a problem. That conflict can become a problem. And so let's say that I am in a partnership with just one other partner, and we're just not getting along, that partner wants to end. We actually then would have to end our partnership, and we may have to reorganize our business. Maybe I bring on a different partner, or maybe I go to be a sole proprietor of that business. With that too, partners share unlimited legal and financial liability. And so both partners or more are responsible for all decisions. So if I have my partner that makes a bad business decision, I'm still liable for that bad business decision, even though I didn't make it. And maybe they even made it without consulting me. I'm still liable for their decision. The next type of ownership is a corporation. A corporation is a company that is registered by the state and it operates apart from its owner. So in the case of a corporation, when we look from the government's eyes, they see the corporation as one entity and then they see the owners as separate entities. When we talk about a sole proprietorship or a partnership, the owners and the business are one thing. A corporation, they are separate. To form a corporation, the owners must get a corporate charter from the state where their main office is going to be located. So the location of their headquarters in that state, then they would have to get a corporate charter. And a corporate charter is just really like a license to run as a corporation. Now, with a corporation, the owners are able to sell stocks or shares in their company. And a corporation has to have a board of directors, and the board of directors are the group of people that are going to govern and run the corporation. Advantages of forming a corporation, biggest advantage I would say is that it's going to have limited liability. So the owners are only going to be responsible for what they invest in that company, not more. When we talk about sole proprietorship and a partnership, they have unlimited liability, meaning they are responsible for all debts of the business, not with a corporation. Also, a corporation is able to raise money through sellings of stocks and shares. With a corporation, if the owner dies, so let's say that I have shares in a corporation, so I'm an owner in a corporation, what happens is those shares are sold, the business continues on. Disadvantages of corporation, they are going to pay taxes twice, so that's called double taxation. Remember, the government is going to see the owners and the corporation, the business, as two separate entities. So the corporation, when they have income, they have to pay tax on that income. Then as an owner, when I make income from my business, I'm also going to have to pay taxes on my income. So it's double taxation. There's also going to be a lot more regulations that corporations have to follow from the government. Now, that doesn't mean that a sole proprietorship or a partnership has no regulations that they have to follow. Depending on the type of business, there may be some, but a corporation is just has a lot more. And then I would say the biggest disadvantage of a corporation is how difficult they are to start, how costly they are to start. There's a lot more that goes into starting a corporation than there is with a sole proprietorship or a partnership. Now, there are other ways to organize businesses. So we're going to talk about a couple more. So one additional way is a cooperative, and a cooperative is an organization that is owned and operated by its members. The whole purpose of a cooperative is to save money on the purchase of certain goods and services. It also can make marketing of goods and services more efficient and profitable for that group. Ocean Spray would be an example of a cooperative. Ocean Spray is a group of cranberry growers. If you ever remember commercials, it's usually like there's like two guys standing in some water with cranberries all around them. That is the company Ocean Spray. There is going to be a little video posted on Google Classroom that goes through some information, more information about cooperatives. You can either watch that now or you can wait until we're done with this video. The next type would be a nonprofit. A nonprofit organization is a type that focuses on providing a service but not making a profit. So their main goal is not to make a profit. They are there to provide some type of service. Now, to be a nonprofit, you do have to register with the government. And a benefit of being a nonprofit is you don't have to pay taxes. Really, the main reason is the government wants those nonprofits to help the community, and so they don't have them pay taxes. The last type that we're going to talk about is a franchise. A franchise is a contractual agreement to use the name and sell the products or services of a company in a designated geographic area. So what happens is I would invest money and pay franchise fees, or it might be a share of profits depending on how the franchise is set up. And then I get then a well-known name and a business plan to help run my business. McDonald's is probably the most popular franchise. So I could open up a McDonald's, I could own a McDonald's, and I would get their business plan, their products, and I would pay then a certain fee or a share of my profits to be able to do that. Again, there are two more videos. There's a video about nonprofits, and then there's a video about franchise businesses. You are welcome to watch those now. This is the end of this video.